let's talk about audit and assurance, your favorite subject, and the topic of audit risk and auditor's response, because you know that this question will be in your exam. So let's imagine a popular sample scenario where we're told that the company's revenue, sales revenue, has increased a lot in comparison to last year's revenue, or maybe the gross profit margin increased significantly. What is the audit risk associated with that? Well, potentially there could be a mistake in sales revenue. If it's gone up more than expected, maybe sales revenue could be overstated. But how can we explain that? So the easiest way, guys, to explain this audit risk would be to say that it could be overstated due to cut-off error. And it's possible that sales which were made at the start of next accounting year were actually captured in this year's sales revenue. And if you want to understand how this could happen, just imagine that the year end of the company is the 30th of June 20x5, and the company receives an order on the 29th of June, a sales order from a customer, and they receive the order on the 29th of June, but they dispatch it on the 1st of July. Year end is the 30th of June 20x5. You know that sales revenue should be recognized not on the day we receive the order or on the day we receive payment for it. Normally we should recognize it on the day we dispatch the goods to our customer. So we should look at when dispatch took place and record the sale accordingly. And that is on the 1st of July, meaning next accounting year. Yes, but it's possible that by mistake we recorded that sale in this year's revenue because we got the order on the 29th of June. And that would mean that sales revenue is overstated. It's more than what it should be, because the amount of this sales order we recorded, the revenue for that, belongs to next year. And what could be the auditor's response to this audit risk? Well, it's quite simple. Remember, the auditor's response is an action the auditor can take to check if something is wrong, what we identified as audit risk, to check if that is a mistake. So if we think that there is a potential cut-off error, the auditor should do something to check if those sales from next year are captured in this year's revenue. And the easiest way for you to explain that and score your mark is just to say that the auditor should do detailed cut-off testing, checking the goods dispatch notes either side of year end to make sure they're recorded in the correct accounting period.